Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top business stories. Fresh enthusiasm in equity markets as Sensex jumps 934 points in the green for a second consecutive day. Nifty adds 289 points as metals and IT shares lead the way. Rupee falls to a fresh low after staying above the 78 level for the past few days. Persistent fund outflow and jump in crude oil prices spoil the sentiment. The Indian currency closes down 12 paise at 78.10 to the US dollar. Life insurance companies may be allowed to sell health insurance policies. Insurance regulator IRDA said to be seriously considering the proposal move to deepen insurance penetration and drop premium rates. A day after it virtually accused Biocon of giving bribes, CBI arrests the Associate Vice President of Biocon Biologics, L Praveen Kumar, hours after it took the joint drugs controller into custody. After floating home loan rates, floating rate fixed deposits now in focus. Yes Bank launches deposits with interest rates linked to RBI repo rates. Promises immediate increase if the central bank raises its rates. Rakesh Jhunjhunwala-promoted Akasa Air gets its first Boeing 737 MAX aircraft lands at Delhi Airport in its vibrant orange color. Airline says it's ready to begin commercial operations next month. Finance Minister Nirmala Sitharaman dons yoga gear to join others on International Yoga Day. Commerce Minister Piyush Goyal and Adani Group Chairman Gautam Adani also celebrate the summer solstice with yoga on the mat. Seems like no bad news is good news for Dalal Street. Benchmarks advancing for the second day and logging their best day in over 3 weeks. Sensex zooming 1,200 points intraday, however settling 934 points higher at 52,532. Nifty also gaining over 280 points to reclaim 15,600. Absence of fresh selling triggers in the domestic and global economy, along with falling commodity prices leading to that relief rally. Benchmarks advanced and were aided by broad-based gains across all sectors led by oil and gas, energy stocks and so forth. A day after ending in the red, broader markets also outperformed. 48 of Nifty stocks rallied in trade. Nifty, in fact, if we take a look at some of those gainers, Titan was the top blue chip gainer on the Nifty. Others include Hindalco, Coal India, JSW Steel and Tata Motors. The rupee, however, continued to decline, closing at a fresh low of 78.08 against the dollar. It could be a big trigger needed to deepen the penetration of health insurance across the country. The insurance regulator, IRDA, is reportedly considering a proposal to allow life insurance companies to issue health insurance policies. If allowed, the move will not only increase access to health cover, it will also go a long way in reducing the cost of health insurance. According to the economic survey, life insurance penetration in the country was 3.2% in 2020 versus non-life insurance coverage of just 1%. Non-life insurance is not just health insurance, but also includes motor insurance, fire and industrial insurance. My colleague Tina Jain Kaushal joining us on this. Tina, what are some of the benefits and pitfalls of such a proposal?
Thank you, Abha. 6 years after the insurance regulator banned life insurance companies from selling health insurance policy, it is considering allowing it again. This is because the committee, which was formed 2 years ago, has submitted its proposal to the IRDA Chairman Debashish Panda. This is a welcome news for policy holders as premium rates are expected to go down because of intensified competition between general and life insurance companies. On the other hand, health insurance policies need lot of hand-holding. We know health insurance companies have good claim settlement processes already in place. We don't know about life insurance companies. If this proposal gets through, we need to see how life insurance companies are ready to give smooth claim process to their policy holders.
Right. Tina, how do you expect the health insurance market to change if such a proposal is passed?
Mediclaim policies are considered to be the most popular type of health insurance policies. Currently, life insurance companies are only selling fixed benefit plans. So, if life insurance companies are allowed to sell indemnity plans, definitely customers have wide range of options in the market, and this will increase in turn the insurance penetration in the country. To give the numbers, general insurance penetration is just 1% against the global benchmark of 4%. So, if life insurance companies come with their agency force, which is as huge as 2.5 million agents and 50,000 corporate agents, health insurance penetration is definitely going to increase in the country.
All right. Thank you for that, Tina. In a major blow for Biocon, CBI has arrested an associate vice president of Biocon Biologics, a subsidiary of the Kiran Mazumdar-Shaw company. This follows the arrest of Joint Drugs Controller S. Ishwara Reddy for allegedly receiving a 4 lakh rupee bribe to waive the phase 3 clinical trial of the insulin aspart. That's an injection developed by Biocon Biologics to control type 1 and type 2 diabetes. The agency also arrested Dinesh Dua, director at Synergy Network India Private Limited, who was allegedly giving the bribe. Biocon Biologics, meanwhile, has issued a statement saying it strongly denies allegations of bribery. It also added that the company is governed by a strong code of conduct and it strongly condemns any acts of corruption and violation of rules by way of offering or paying bribes or undue favors, directly or indirectly. SEBI has barred asset management companies from selling plans that bundle insurance with their mutual fund schemes. The regulator cited the instance of bundling insurance features that provided free life insurance cover to SIP buyers. SEBI in the notice said that no existing schemes or one which are proposed to be launched shall have bundled products. On the other hand, SEBI has allowed mutual funds to resume investing in foreign stocks within a total of $7 billion limit. An AMC can invest up to $1 billion overseas. The market regulator's decision comes in the backdrop of a correction in global markets that brought down the international valuations. Now, despite market uncertainty, gold prices continue to fall. Is gold falling out of favor, or is it the right time to invest in the yellow metal? My colleague Sakshi Batra had a word with Navneet Damani of Motilal Oswal. Listen in.
What kind of targets do you have in mind for gold prices, say the year-end target or maybe FY23 target? What do you have in mind?
Well, for the last 2-3 years, we've been very, very bullish on gold, and from 38, 39,000, we were chasing target for 54, 55,000. I believe we've already met those targets, and from here on, our stance is a little cautious. Our approach is that maybe you might see 53, 54 once again, but those prices are not likely to hold around, and eventually we will slide below 50,000 also, or on the COMEX front, maybe around 1650, 1700 is where we see COMEX prices sliding towards. So we are not very, very positive, and say in best case, if you see a decent rally because of any macro backdrop change, that could be an opportunity where one could look to book some profits for already invested investors, and for fresh investors, maybe a correction, sharp correction could be an opportunity.
Okay, but since you said that you don't expect very, very sharp returns on gold, despite that, I want to understand from you, because we've seen that stock markets have been going very, very volatile. In the first 6 months, it's been a roller coaster ride. So in comparison to all the other asset classes, do you still believe that FY22, FY23 will actually turn out to be an outperformance for gold vis-a-vis other assets? Do you believe that?
Well, vis-a-vis other assets, they've already corrected very sharply. But if you see year to date, for gold, we started the year on a very positive note, and we kind of retraced all the gains. So we are almost at zero as far as gold is concerned. For the end of the year, I'm not very sure that we would end around 48,000 or we'll end around 54,000. But there is a bright possibility that given the current backdrop where most of the risky assets are getting little riskier and the safe haven are being considered, gold could gain some traction. However, this story might turn around in the second or in the third or fourth quarter of 2022, and that is when we believe that the current returns will also fade off, and probably negative returns could start to kick in for gold.
Okay, perhaps difficult time going forward from here, not too aggressive targets right here coming in for gold going forward. But we've seen a lot of activity even in the digital space for gold. The first tranche of sovereign gold bonds for FY23 has opened for subscription. It is currently open as well. Should one invest in this gold bond scheme?
Well, gold bond scheme is a 8-year investment. It's not probably 200 rupees here or there will not make much of a difference for an investor who's got 8-year time horizon in mind. So
Yeah.
of course, this is a very good investment proposition as far as this is concerned. But be very clear that you will not be able to exit the scheme intermediary. If you want to exit, you need to pay a discount of about 8 to 10% on the current prevailing price. So if you have that kind of horizon, it's a wonderful scheme. You get tax-free benefits. You get about 2.5% interest on your investment every year, and a decent lock-in period of about 8 years. And also for a retail investor, you get about 1% discount to the current prevailing price. So all this makes it a very interesting proposition, and one should be looking at it from an investment avenue. But bearing in mind that 8 year is a lifetime horizon that you need to invest.
Yeah, for long-term investors, it's a good idea. So basically, between physical gold, the sovereign gold bond scheme, and the other digital forms of gold, where would you currently advise investors to put in their money?
Well, the challenge with physical gold is once you invest in physical gold, you have making charge, which could be in the range of 8% to 12%. So immediately after your purchase, you've lost about 8 to 10% of your capital. Mostly in case of jewelry, that happens. In case of physical gold, also the making charge is roughly around 3%. That gives you about 3% negative return immediately after your purchase. But that's not the case with other digital assets or sovereign gold bond. And secondly, the storage cost, the storage value, and all that. For physical gold, of course, the purity question that all keeps on lingering, and that is making sovereign gold bond or digital gold bond an interesting proposition for the last 3-4 years. Now, talking about digital gold, there are various digital gold platforms which are available where you could live, and the most prevalent one among investors is the ETF. There are a lot of ETFs which are listed from HDFC, from Nippon to other avenues which are listed on the NSE and BSE platforms, and the annual fees is roughly around 0.4 to 0.6% of many of them. So if you are holding it 5 years, 10 years horizon, also the annual maintenance charges doesn't hits you or bites you too much. And given the current moment in gold prices, you could look to buy at every drip, every tranche, do an SIP, or probably you could look to trade also on this. If you get at a lower price, you could look to enter, and probably at a higher price, you could look to exit also. That's all possible if you are a digital investor, but that's the challenge for a sovereign gold bond or a physical market participant. So that's why digital is the key theme for gold at this point in time.
Tracking all asset classes in a time of high inflation. Moving on for now, 1 month later, another airline will take to the skies over India, competing with Indigo, Air India, SpiceJet, Go First for a pie of the market. The airline in question, stock market guru Rakesh Jhunjhunwala-promoted Akasa Air, which received the first plane of its fleet this morning in Delhi. The airline plans to take to the air in July.
This aircraft, the first of Akasa Air's planned 72 narrow-body Boeing 737 MAX planes, landed at Delhi Airport on Tuesday morning, after a long flight that began in Seattle on Friday, the 17th of June, via Iceland and Cyprus before reaching its new home of Delhi. Its next destination, the skies of the subcontinent. The airline is expected to receive at least 2 more Boeing 737 MAX aircraft within 4 weeks, enough to start commercial operations by the end of July. 18 aircraft will be delivered by March next year and the remaining over the next 4 years. Akasa Air, which has been allotted the airline code QP by the International Air Transport Association, will be flying hot in the wake of market leader Indigo and others like Go First, AirAsia India, SpiceJet and Air India. Fortunately for Akasa Air's co-promoter Rakesh Jhunjhunwala, for whom this is a big bet outside of India's stock markets, Akasa's entry coincides with the return of passengers, a time when no more than a scattering of flights have empty seats. Airfares are soaring and airports are crowded as Indians continue to take to the skies with a vengeance after the lifting of COVID-induced travel curbs. It also comes at a time when Air India is regaining its mojo, with reportedly a mega order of 300 single-aisle aircraft in the wings, and speculation that a redesign of Maharaja could be in the works. Akasa's flights lands at a time when a reborn Jet Airways is also set to take off again. Amidst all this, a question that is being asked, which is the best looking airline of all? Early response from an online poll by Business Today showed that customers seem to prefer the Air India colours. For all the livery, it was Air Vistara that showed real class by tweeting a welcome to Akasa. And as far as the Indian consumer is concerned, one would hope that this show of bonhomie between the airlines should translate into increased competition, lower fares, and better on-ground and in-flight services. Bureau Report, Business Today Television.
Now, the iconic breakfast cereal and snack maker Kellogg's is splitting into 3 companies. The 3 verticals will focus their business on cereals, snacks, and plant-based foods. In an announcement earlier today, the company said the spin-off of the yet-to-be-named cereal and plant-based food company should be completed by the end of next year. Additionally, the company's corporate headquarters will move from Battle Creek, Michigan to Chicago. It will, however, maintain dual headquarters in both cities for its snack company, which makes up about 80% of current sales. Uncertainty over the Twitter deal persists. Billionaire Elon Musk says that there are still a few unresolved matters with his Twitter offer, including the number of spam users on the system and the coming together of the debt portion of the deal. Not only is the future of the Twitter deal in jeopardy, but uncertainty looms large over the jobs of many Tesla employees. According to the Tesla CEO Elon Musk, Tesla will fire 10% of its employees, and the company will be laying off these employees in the next 3 months. The job cuts will amount to about a 3.5% reduction in total headcount at the company. And here's what else is making news in the corporate world. After floating home loan rates, its floating rate fixed deposits. Yes Bank launches deposits with interest rates linked to RBI repo rates. Yes Bank promises its customers an immediate increase if the central bank raises its rates. According to reports, Sequoia Capital-backed Indian skincare startup Mamaearth is in talks to raise at least $300 million in a planned IPO next year. The company is seeking a valuation of around $3 billion. Sales and marketing automation platform Lead Squared is the latest entrant in the Unicorn Club. The company has raised $153 million in a funding round led by Westbridge Capital. The startup helps firms automate sales and provides firms with tools to easily onboard vendors. How often do you think of leaving your full-time job and switching to practicing full-time yoga in the hills? Business Today TV tracked down one such adventurer. Listen in to Karishma Asudani chatting with Sushil Jain, an MBA-turned-yoga practitioner who shares with us his journey from being a financial analyst in a bank to now a full-time yoga teacher.
What do you think of a relation between yoga and finance? I've read this a lot, that if you do yoga, you can make money, you can save money, you get this power and patience to handle your finances better.
Well, if you look at the traditional yoga philosophy, there's a concept called as aparigraha, which means non-possession. But when you look at the money, it's quite contrary, like you need to make money and save money. But we are living in a different world, not in a world which was 1,000 years back, where there was no need of a lot of money. But now, the relationship between yoga and money is quite direct and also indirect, because when you do yoga, you are at a peace of mind and you can make better decisions. And a wrong decision can cost you a lot of money. And if you make good decisions, you're always saving money. And indirectly, when you're healthy, you have to spend less money in the hospitals.
So directly doing yoga is going to cut down the bills of a lot of hospitals or insurance companies who are out there selling schemes. But that's good to know, Sushil. Tell me, Sushil, how does a day in your life look like? Is it morning to night yoga?
Well, earlier, before COVID, yoga was mostly during the day. But now that we are living in a globalized world system, where we have Zoom. Even in the night, I have classes where I'm teaching people in the US or the other part of the world where it is day when it is night in India. And my typical day, I wake up early. I was always a morning person. I like to do things in the morning. So I wake up around 5:30, and then I sleep at 10. Between that, I keep juggling between my yoga classes, and I also like to be updated on my social media. So that also takes away some of my time, and also self-improvement, reading, and self-practice.
Right, that's good to know. And knowing the fact that you actually also have global audience and global, I'd say, consumers who are learning from you. India and of course all the other countries are celebrating its 8th International Yoga Day in this year. Do you think this whole journey from, like you said, stress to stretch is successful in bringing a global movement? Because I think yoga is not just about the physical health, but most importantly, it is about the mental health.
Yes. So I have been teaching before COVID. Most of my teaching was in Goa, Himachal, also in other Asian countries. I've been to China also and Bali. So most of the people who come to India and other places for yoga are the Westerners. So they are so much attracted to yoga, and especially after this International Day onset, this is the 8th year, the popularity has grown so much, especially after the pandemic. The people doing yoga have increased. And I think the government of India should promote yoga tourism, where people from around the world can come and spend time in the yoga hotspot like Rishikesh or even Goa. Every natural place is becoming a yoga hotspot now.
That's where we leave it on the show today. Wishing you all a happy International Yoga Day. Thanks for watching.